to another exciting episode of Beyond the Brand. Today's episode promises to be both impactful and insightful as we have conversations around the First Mutual Wealth Gold ETF. We are honored to be joined by Mr. Sivarashe Mangwegeza, the fund manager from First Mutual Wealth. Good morning, Mr. Sivarashe.
Good morning, and I'm happy to be here.
Thank you for joining us this morning. As we start off our conversation, in simple terms, explain to us what the First Mutual Wealth Gold ETF is all about.
Well, thank you for that question. So the First Mutual Wealth Gold ETF is a bundle of 5 gold-related assets that are listed on the Johannesburg Stock Exchange. So with the gold ETF, with $1, you're actually gaining exposure to all 5 assets at once.
What exactly does the First Mutual Wealth Gold ETF invest in?
So the First Mutual Wealth Gold ETF has 5 securities, as I previously mentioned, namely the One Invest Gold ETF, Harmony Gold. One Invest Gold ETF is an exchange-traded fund that just holds gold. That represents 50% of the gold ETF. And the other 4 assets are gold mining assets that are listed on the Johannesburg Stock Exchange. There are 4 gold mining companies. That's Harmony Gold, DRD Gold, Anglo Gold Ashanti, and Gold Fields. And we selected these companies because they are large gold mining companies that consistently pay a dividend and are listed on the Johannesburg Stock Exchange.
So these 5 companies are listed on the Johannesburg Stock Exchange?
Yes, they are listed on the Johannesburg Stock Exchange, including the gold ETF. So you can see it goes with the theme of the asset just having a gold theme.
Okay. Why is the First Mutual Wealth Gold ETF listed on the Victoria Falls Stock Exchange?
So we're listing on the Victoria Falls Stock Exchange because it gives retail investors access to this asset. The price point is going to be quite low. We're targeting a listing price of between 10 to 12 cents per unit, and I'm sure a lot of Zimbabweans can afford to invest in gold at that price point. The second reason, the VFEX is overseen by our regulators. It compels us to be more transparent, and obviously with the regulator in the background, it does point to safety for the investor as well. Maybe as another final note, the VFEX is also going to be listed as an offshore center for Zimbabwe, which also protects the foreign currency that's invested in that asset. So those are the 3 main reasons.
So the First Mutual Wealth Gold ETF is actually complying with the regulatory rules of the nation?
Yes, and we went through a lot of rigor to get this asset listed on the VFEX.
Well noted. Mr. Sivarashe, why do people invest in gold in the first place?
So maybe I'll start with a common, maybe not a not so common fact, but quite interesting. So if we were to take 20 ounces of gold in 1920 or 1926, which is 100 years ago, that same 20 ounces of gold has grown 240 times in value, whereas $20 US dollars has lost 95% of its value. So in essence, gold actually hedges against inflation and value loss, and we thought it would be a good product for Zimbabwean investors to buy into.
If one invests in the First Mutual Wealth Gold ETF, how different is it from buying physical gold and gold coins?
Okay, so in terms of the actual gold assets that are listed on the Johannesburg Stock Exchange, the gold assets are actually insured, and the custodian for that gold is JP Morgan Chase, which is physical gold. But remember, if you're actually buying physical gold, you need to store it somewhere. You also need a lot of money up front to actually have physical gold that you can hold. So by listing on the VFX and allowing investors to participate in that asset, you don't need insurance, you don't need security around the gold that you hold, and you can also get in at a very low price point, which we think is quite good. The other factor is that it's more liquid. If you decide to sell your gold today on the VFX, it's as easy as 1, 2, 3. Settlement is in 2 days and you get your cash. If you want to buy it, you just talk to your broker, you give them an order, in 2 days, you've got your First Mutual Wealth Gold ETF unit.
So what I'm hearing is that the First Mutual Wealth Gold ETF is more secure.
Definitely, it's definitely more secure, and it's easier to invest in and to disinvest from as well than physical gold. With gold, you probably need security. If somebody steals your gold, can you report to the RBZ that I was hiding gold in my locker? You can't. So it's a safer way to invest in gold.
Why are we including gold mining companies and not the gold itself?
So from our research, what we've seen is that gold mining companies during gold rallies actually perform better than the actual gold price. So we're hoping that by holding the First Mutual Wealth Gold ETF, you get better price returns from the ETF than actually just holding physical gold. That's the first point. The second point, the gold mining companies that we're choosing actually pay out a dividend. If you hold physical gold, you don't get a dividend. But by holding this asset, you also get a dividend, which helps to liquidate the investment that you have rather than just holding physical gold.
How can a retail investor actually invest in the First Mutual Wealth Gold ETF?
So it's quite simple, really. They just get in touch with their broker. The sponsoring broker for this transaction is Acribos Securities. They can get in touch with them. They can come directly through us, through First Mutual Wealth. They can go through CorpServe. If they've got a broker that they prefer, that they've always been using, they can also approach them. There's the simple KYCs that are required, which is an ID. You fill out our form, you give us your proof of payment, and you're ready to go.
So you have quite a number of brokers that you're working with?
We've got a lot of, every approved broker in the market can actually purchase the First Mutual Wealth Gold ETF on behalf of their client. We've just maybe mentioned Acribos because they're the sponsoring broker to this transaction, and they're the ones which actually have access to the bigger market in terms of being closer to us in this transaction.
Let's talk United States dollars. What is the minimum amount that one needs to invest in?
So we're trying to make this product very accessible to investors. Remember, we're trying to make retail investment something that is quite active in this market. So for an investor to actually purchase the security, the minimum that they need is just $100, which is a very low price point. And at current prices, you should be getting close to 9,000 units, which I think is quite good.
How often does one need to contribute?
It's according to how they feel. If they want to save $100 a month, it's up to them. It's just the initial tranche that they need to actually purchase $100. Thereafter, $20, $30. The bigger investors, $500 if they want. What we think with this product is that it's a savings product that can actually protect you and hedge you against inflation for the long term. Remember, also, the assets are listed on the Johannesburg Stock Exchange, so they are diversifying risk as well. So you can actually start a savings plan for yourself, for your children, for your educational needs, and so on.
So I don't need to make a monthly contribution. It's as and when I can afford to.
So working in the investment field, you should be in the habit of investing. Making investments monthly will actually see your investment growing quite strongly, but you're not compelled to invest monthly.
One thing that we want to find out is how does the gold ETF generate returns for the investors?
All right. So as I indicated earlier on, the underlying assets for all these assets is actually gold. And I did mention the fact that gold is a good inflation hedge. So for instance, if the gold price, right now gold price is at 4,700. If the gold price ticks up to 5,000, you've already enjoyed that benefit. And remember, gold mining companies, usually, if the gold price ticks up by 10%, they go up by a higher margin. So if you think that gold is going to do well for yourself, the First Mutual Wealth Gold ETF is the asset to buy.
Mr. Mangwendeza, can the investors easily sell their First Mutual Wealth Gold ETF units if they need cash?
I think that's a very important question, and thank you for that. So it's one of the primary reasons why we listed the asset on the Victoria Falls Stock Exchange. So by listing the asset on the Victoria Falls Stock Exchange, all you need to do is to put a sell order with your broker, and you can easily access your cash. If the Victoria Falls Stock Exchange doesn't have enough liquidity, we just sell the underlying securities that are on the Johannesburg Stock Exchange, and you still get your US dollars from the offshore market. So there are actually two sources of liquidity for this product, which is quite a first for the VFEX as well.
What are the two sources of liquidity?
So the two sources of liquidity is the Victoria Falls Stock Exchange, which is the faster one. You get your money in T+2, which is you trade today, you get your money 2 days later. The second source of liquidity is the Johannesburg Stock Exchange. Remember, the First Mutual Gold Exchange Traded Fund is holding securities that are actively trading in Johannesburg in South Africa. So we can actually sell those assets to raise the money that the investor requires. That process might take a bit longer, maybe 1 week, but you still get that US dollar liquidity. So it's actually an advantage to actually trade with the First Mutual Gold ETF because it's got two sources of liquidity rather than just one.
How is the value of the First Mutual Wealth Gold ETF calculated?
So the value of the First Mutual Gold ETF is calculated by taking the value of the Johannesburg Stock Exchange listed securities, all 5 of them. We subtract fund expenses, and what remains the actual value of the asset. That's how it's actually calculated. And that's where the price actually comes from when we're actually listing it on the VFX.
That's quite interesting, Mr. Mngwendeza. Can the gold ETF price differ from its actual value?
So yes, that can actually happen. So when we list the product on the Victoria Falls Stock Exchange, it's now responding to some supply and demand factors in the Zimbabwean market, which might be different from the South African market. But because you can actually redeem the same securities directly from the Johannesburg Stock Exchange, we're hoping that action will make sure that the price stays within a reasonable bandwidth of the actual price of the asset.
Let's talk about risks and safeguarding the investment for the investors.
Yeah.
What are the main risks that the retail investor needs to understand?
So I think the principal risk is that, remember, what you're investing is actually gold. So if the price of gold goes up, happy days for you. If the price of gold goes down, sad days for you. What I would say for retail investors is that they just have their advisor, just inform them about what they think about gold markets before they invest in this product, because the gold price fluctuation is the biggest risk. There are also factors like liquidity, but we do think that that risk is quite low because there are 2 sources of liquidity for this asset. There could be changes in the policy regulations in South Africa, but we do think that the changes are not going to be as drastic as we've seen historically for Zimbabwe. There are also issues to do with costs. The cost of trading might change. Right now, the South African market is much more competitive than the Zimbabwean market. The VFX is much more competitive than the Zimbabwe Stock Exchange. So in terms of that as well, you can just see that, yes, the risk is there, but I think we've done our homework in terms of mitigating that risk actually materializing.
While we talk about risks, how are the investors' assets protected?
So as much as we manage the fund, First Mutual Wealth, we actually do not hold the assets. There are actually 2 layers of security. So when we purchase and list the shares on the Victoria Falls Stock Exchange, the units, the custodian for that unit is not First Mutual Wealth. It's an independent custodian in the name of CBZ Custodial Services. They're the ones that hold the units on behalf of the investor. We're just managing the fund. The second layer of protection is that the underlying securities that are listed on the Johannesburg Stock Exchange have their custodian as well. The One Invest Gold ETF has the custodian as JP Chase, which is also ensuring against any gold that might be stolen from the vaults. So you can see that there are layers of protection, which I would actually argue actually better than some of the listed companies that we have. Dare I say that, of course.
Okay. What fees do investors pay? Are there any fees that are associated with investing with the First Mutual Wealth Gold ETF?
So yeah, there are definitely fees that are associated. When you're trading on the Victoria Falls Stock Exchange, there are trading expenses. I think one of the biggest, one of the more recognizable expenses are stockbroker fees. So whenever they trade, they take about 0.92% of whatever the value is. On the First Mutual Wealth side, we do charge a management fee of 0.5% per annum. So it's quite low and quite competitive. If you compare that with other management fees, give an example for pension funds, they charge 0.8% for actually managing those funds. So in terms of management fees, we're actually cheaper than actually investing your pension fund with an asset management fee at 0.8%. So those are the biggest costs. The other fees are related to maybe auditing fees, but those ones actually come once a year and they're spread throughout the cost of the fund. So as the fund grows bigger, those costs actually reduce in terms of their overall impact to the investor. So they're quite low. We're targeting fees of lower than 0.7% per annum that will actually be charged to the investor every year.
What is the minimum investment period for the First Mutual Wealth Gold ETF?
So I think there are 2 facets of answering that question. If you're investing in an asset such as gold and you're using it to save money, I would say that maybe your investment horizon needs to be a bit longer, maybe 3 to 5 years, so that you can actually gain the cumulative impact of the returns in the gold price. However, for our product, there's actually no minimum. Because remember, with gold prices, perhaps you buy the gold ETF today, maybe the Straits of Hormuz are cleared and the gold price rallies and you think you've made your money or you've reached your savings target. You could literally sell the asset next week. Remember, the turnaround cycle for buying and selling assets on the VFX is only 2 days. So there's no minimum investment period, there's no lock-in period. It's really up to you. And I'm hoping that the investors and the viewers of this program actually have a financial advisor that can actually help them with that aspect of the investment.
While we're talking about investment period, is this a short-term trading product or a long-term investment?
If you're using it for savings, it is a long term. If you're using it for speculation, it's a short term. It actually fits any mold of investor. So I would say that if you've got a certain investment target, the First Mutual Wealth Gold ETF can actually fit into any of those molds. If you ask me directly what I would use the First Mutual Wealth Gold Exchange Traded Fund for, is I would use it for long-term savings. Because remember, I'm holding a safe asset. If I'm saving for my child's school fees, the money that I put away is going to be guarded against inflation. It's going to be liquid. It's also diverse from country risk. So I think in that aspect, it's actually a good product for saving.
Who is this product suitable for?
So this product is suitable for everybody. The retail investor, the high net worth individual, the corporate, the pension fund. It actually fits into a number of nodes of whatever the investment goal might be. Remember, for the retail investor, $100 is how you actually get in. You've got your gold ETF units. If you're saving towards something special, instead of using local currency or US dollars, and you're trying to run away from bank charges, this asset, as the gold price actually increases, helps you to save and actually gain returns on that asset. For corporates, it's also good. You want a liquid asset to cater for long-term liabilities. Excellent. For pension funds, you're trying to save for 20-year liabilities for your pensioners when they retire and they need the cash. This mold actually fits this product actually fits the mold quite perfectly. So it's for everyone. We are not leaving anybody behind with this product. Thank you.
You mentioned something about pension funds. Can you explain a bit more on how pension funds can actually benefit from this product?
All right. So I think for pension funds, and I think this is something that this country has probably been robbed of because of currency changes and hyperinflation. There was no actual real long-term product that could cater for the long-term investment horizons for pension funds. So maybe just to make it simpler, for a pension fund, somebody who's starting to work today might be retiring in the next 20 or 30 years. So whoever is managing the pension fund for that particular employee needs to plan for liabilities that are going to be due in the next 20 or 30 years. So if you look at our current market right now, we don't have mortgages that go beyond 20 years. A lot of the investment products have very short tenures, 3 to 5 years. But with the First Mutual Wealth Gold Exchange Traded Fund, gold will hedge against inflation for the long term. Maybe even after 30 years, the gold price has gone up by a higher percentage than the inflation rate. So in terms of pension funds looking for assets that are liquid, that they can plan with some sort of definitive idea of what the value will be, the First Mutual Wealth Gold ETF can actually cater for those liabilities. So I think for pension funds, this is also an excellent product to have on their portfolio to cater for those high liquid needs when people are actually retiring in the future.
Mr. Mangwendeza, when it comes to currency changes, how is First Mutual protecting the assets of the retail investors?
So I think that's one of the key features of this product. And I need probably to just maybe put it into context as well. So I did mention that fact that the US dollar in the last 100 years has lost 95% of its value. So it's not only the local currency that loses value, even the US dollar loses value. By holding gold, gold is immune from this value loss, because if the value of the US dollar goes down, the price of gold goes up. So it naturally hedges against the value loss implications of inflation. The biggest value eroder for any pension fund or investor is the value of the currency that they use. If you're holding an asset that generates higher returns than the inflation rate of the currency that you're holding, I would say you're top marks for that. And I think the First Mutual Wealth Gold ETF specifically does that and awards investors for holding it.
Yeah. What is the key takeaway for our retail investors listening today?
I'll say the key takeaway is that this product is a first of its kind in Zimbabwe. I would say it's a product that has really been required in this market. Zimbabwe is known for significant gold exports, but there's never been a product where retail investors can actually participate in international gold prices. This product literally offers that advantage on a doorstep. You don't need to apply for CD1 forms, for acquittals. You're not charged TT transactions for investing in an offshore market. All you need to do is to call your broker, wire your money into their bank account, and instantly you've got access to international gold prices, which you can use to save for your future.
Thank you so much, Mr. Mangwendeza, for joining us in today's episode of Beyond the Brand and unpacking the conversation that surrounds the First Mutual Wealth Gold ETF.
Thank you. It's been a pleasure.
As we come to the end of today's episode, we'd like to thank all our viewers who joined us for the insightful conversation about the First Mutual Wealth Gold ETF. For more information on this product, do not hesitate to contact the First Mutual Wealth team on the contact details on the screen. Until next time, stay informed, stay empowered, and remember to invest in your future.